Thank you for watching us at xm.com for this Forex Preview video. I'm Cristina Marujos, and joining me today is investment analyst Cristina Partenidu. We'll be looking at U.S. core PCE inflation. So there's a general feeling that the U.S. economy is slowing down. Do you think the inflation data released this week could prove that things are not going as well as before?
Well, the Fed chief said at the Jackson Hole meeting that the U.S. economy is at a favorable place, and I wouldn't disagree because if you look at the bigger picture, the U.S. is still on the top list of the best performing G7 and G20 economies. But compared to where we have been last year, economic indicators, including the core PCE inflation index, which is expected to come at 1.6% year on year and well under the Fed's 2% target, are showing a more fragile economy. Of course, the jobs market is still at a great shape and consumption is healthy, but with the positive effects from tax cuts fading out and the escalating trade tensions weighing sharply on business sentiment and particularly on the manufacturing sector, markets are reasonably concerned that consumers may not be able to keep offsetting the weakness in factories for long, and therefore the U.S. economy may further slow down, pushing inflation even lower.
I see. Now let's move into monetary policy now. There have been some headlines that the Fed will actually cut rates by more than 25 basis points, which is already fully priced in. Do you think that will be the case at the September meeting?
Well, the recent escalation in the trade war was dramatic. The U.S. president threatened to add another 5% tariff on Chinese imports on 1st of December and then later in mid-December. And if he keeps his word and acts before the FOMC policy meeting with China retaliating as well, the Fed may seriously consider to deliver a sharper rate cut. But I think that the main problem is not what the Fed is going to do, but rather how long the trade war is going to continue. So whether the Fed acts more aggressively or not, the U.S. economy may continue to face headwinds unless we have a trade solution.
And of course, recent developments in the trade war have turned the outlook for the U.S. economy even bleaker. How do you think the dollar will react at this week's inflation data?
Well, the dollar has been shortly responding to data releases recently and is likely to keep this behavior this week as the inflation data are coming just before the end of the month, and investors have already set their safe positions, eagerly waiting the Fed to give them the next direction. So the dollar may pay little attention to the data this week and hold neutral against safe haven assets such as the Japanese yen and the Swiss franc, unless, of course, we have new trade developments and the data deviates significantly from forecasts.
Cristina, thank you for joining me and thank you for your insights. And thank you for watching us at xm.com.